Morning, this is Andrew from Trend Following Mentor. It's March 13th. This is the weekly review. And the question that seems to be coming up is the bull back? And actually, there's a rally and it's intact. But there's several questions with this rally. The first, let's emphasize on the good stuff. That one of the major lines of importance, one is the 50-day moving average, which we've taken out. You can see right here. And now we've taken out the 200. That's very, very, very positive. The only question, or the big question, is if this rally can hold. And I'm not trying to be negative, I'm just trying to weigh out the facts. If we're rallying, you want to see on strong volume. And this has not been the case, as you can see here. We've had selling on much higher volume, but you can see our chart right now is saying we're bullish. In the S&Ps, in the Dow, I'm sorry, we're above the 200-day moving average. Big positive. If we look at the QQQs, the NASDAQ, we're not there yet. And again, it was on lower volume, not positive. S&P 500 took out the 200-day moving average. I look at it, and again, you have to use your own rules. I want to see that we're trading above the 200-day moving average with the 10-day and the 30-day both above. It's going to get me a little bit late, but it's going to keep me on the right side of the market. And right now, this has been a very, very difficult period to trade. And what makes this rally even more hard is there's very few growth stocks or quality growth stocks that are participating. But we're going to talk about a couple of them. Let's jump over there. So this one, this candle, because what you do is you look at the fundamentals and the technicals. You can see a cup. Here's a little bit of a handle. You can be in it around 65-ish. And you had some nice volume going in here. That's one. That's a little bit of interest. O'Reilly Auto Parts, been very strong, and this is now a first base because we undercut this prior base. You can even be buying above here, above this 272 line. Oops. And we PayPal is a little bit interesting. You always look at the week. You can look at the weekly. You can kind of see this starting this cup. You can even be buying the breakout here. Stamps.com was a high flyer. It really gapped up on, you can see this volume here, but then it's kind of been like just kind of petering out. It kind of has this habit of doing that, where you look at here, and then we basically fell a little bit. Let's have another little instance here. So this is a little bit skeptical. I mean, all personally, a lot of this is skeptical. I'm very, very lightly invested. I have, and they're not really working, which they don't have to work, and that's what trading is all about. I was actually short Amazon. I'm also short Netflix, and I'm long the mini miners. And I'll explain to you why I went short. Netflix, basically, you almost had like a head and shoulders pattern here, went up to the 50 and started failing. So I tried to short this going in from here, this failure, and so far it's not failed. And the market took off, so I have no idea if this will work or not work, but I just took a small bet and to see what happens. Amazon, similar scenario, that had a failure here, and then we rebounded. These are called retracement trades. I mean, we have breakout trades and retracement trades, and we kind of failed here. And so far the trade is not working. And the gold miners, this is working to some slight degree. It's not the greatest, but we'll see. The other interesting thing I want to point out is, let's just do a long-term S&P here. 1 second. Or QQQ, it's fine. Let me just go to here. What you can do to get a better perspective is look on a long-term chart. And you can see, you look for crossovers. Long-term, this is a monthly chart. You can see how the momentum is diminishing. We're still bullish. Here, we were getting very, very questionable. But it still isn't that overly strong on a monthly basis. This can turn right around, though. And you have to take it day by day. And you want it to see coming out of this moving average, but on a monthly basis. Basically, it's a 13-month moving average. That will give you a little bit more, and we're knocking on the door there. And you can see how long this was bullish, and also how when we're bearish, when we shouldn't have been in the market back in 2008. You could have avoided all this negativity. But this is what trading is all about. What we do at Trend Following Mentor, we try to help you become a better trader. I have the book, The Bible of Compounding Money, the World-Class Trading, Trend Following. I have hourly consulting, one-on-one mentoring. I have a weekend course, study course, $99. Whatever I can do to help you, just let me know. This is my email. Thank you very much.